What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, where you can use a proven and repeatable strategy to make money every day by trading the triple leveraged Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit the subscribe button and the notification bell. Sometimes we release bonus content, so aside from the nightly content and the weekend video, you want to have that notification button hit so you get that bonus content notification as well. Make sure you follow us on X. We do provide real-time entries and exits for our scalps, day trades, mid and long-term trades as well. Just a reminder, we're not financial advisors. We don't offer financial advice, but what we do offer is our view of the price action for SOXL, not only in the current day and in the past, but where we believe price action will take us in the future based off of our charting and trading method. So in tonight's video, we'll just do a quick recap of today's intraday price action. Then we'll do a quick wide view of the SOXL price action on the week, the month, quarter, and the year time frames. We did start a new week and a new month today, so those will be kind of important to see where we're starting out. And then we'll get into our triggers and targets for tomorrow, and then we'll review our triggers and targets for the week, month, quarter, and year. So let's get into the charts first. Just looking at our intraday trading, excuse me. If you take a look here at the 2408 level, you can see this was the opening print for the day. We've marked it for the week and the month. This is where the month and the week have opened. So just take note of this level. It is a big factor in our intraday trading. So in general rule with our trading method, we're looking for puts with lower highs underneath the opening print, and we're looking for calls with higher lows above opening print. So that combined with the strat, if you're not familiar with the strat, it is a very simple way to read price action. Candles can be one of three things: a 1, a 2, or a 3, and there's basically 6 main reversals based off of those numbers. So if you're not familiar with that, just hang with us. You'll have it picked up by the end of the video. It's that simple to learn. So we look at opening price action, and we did get the higher low above the opening print. So we did initially enter calls. We had the swings from Friday, the put swings. We sold those immediately at open. Remember, if you follow us on X, you can see when we're taking our trades and exiting our trades. But as far as the after the opening bell and after we sold our puts, we did take calls at the higher low on the 5-minute. They didn't end up getting stopped out at even because we made a lower high and proceeded to, lower high with this candle and proceeded to make a lower low before we went back up to make this higher high on this 3. So we did get stopped out at even, no big deal. We're still ready to play. We continued to watch how things went, and we saw that there was a lower high. We switched to the 15, and we saw the lower high, so we entered the puts on the lower high. Goodness gracious, wrong day. We entered puts on the lower high here, and we were able to write it down to the market maker's expected low, basically is where we got to. We exited the puts once we got back to this opening print, and we entered calls and basically just rode those up. As you can see, we were getting a higher low here, and you just continue to ride it up. One thing that I do want to bring up, also we talked about on X, what we call half gap, or halfway through the gap fill. If we look at the close of Friday to the open of today, we can see that 50% of that gap is this 2506 level, and that's why we had our first target was the 2483, and our second target of the day was the 2506. Looking for the full gap fill, but you could tell as the day was going on, it was going to take a while unless you just got some crazy squeeze to push us up. So the ultimate target we knew for the end of the day was the 2529. We did exit the calls that we had for next week, and we grabbed a couple of calls for the 19th for the September monthly. Just looking at, if we just look at it all in perspective here and zoom out to the day, let's get a better chart. And we look at where we've been the last 10 weeks. We've got our low here around 24 and our high here around 28 for this range that we've been in. A couple of times we've poked above and below those, and we kind of did that again here. What's this today, and was it Thursday, doing that. But we had basically a quick push to the downside, getting back down to the bottom of the range. We talked about last week, when we were at the top of the range, how it's elevator down, stairs up. So the drop would and probably could and probably would be pretty quick, and we got it in 2 days. But what it did do is leave a couple of gaps. So we do have some, I guess you can call them magnets. Gaps like to be filled. So we've got a couple above. We do still have the one below. So we've got to watch this 2350 area that's last year's low. Try and make sure that we stay above it, or at the very least the 2257 level, which is the top of the gap. As we've talked about before, many times we bounce off the top of the gap, and it's just like we did back here on August 1st. That's what we did. So we got to watch out that we don't get that again if you are looking for further downside action, for the gap to be filled. So don't put too many eggs in the put basket to the downside, unless you get the intraday confirmation, because today was such a green candle, right? We want today to be maybe like a lower high on the 4-hour chart. Let's pull up the 4-hour. Right, we did trigger 2 up on the second 4-hour of today, so we did get the 2 up. Is that if you're bearish, you're looking for that to be a lower high. Looking for tomorrow's 4-hour, overnight to push down. Tomorrow's first 4-hour open, the bottom part of this candle, if not, even gapping down. Well, in the sense of where the second 4-hour candle started, but giving us a 2 down, triggering the 2 up, 2 down for more downside action to test that last year's low, and then the top of the gap. So the top of the gap also coincides with the last month's low, that 2257. So just keep that in mind as an area of support. Again, we're at the bottom of the range. We're looking for the price action to take us back to the top of the range at this point, but we are still ready for downside action. As you'll see later on in the video, when we set our triggers and targets, we will have triggers and targets for the downside, so that if we do see downside action tomorrow, we're ready and we know where we want to go with it. So we've gone through the intraday action, the day, the price action from the day chart perspective. Again, it was a solid green candle, so it did open with the big gap down, but it essentially pushed up, not in the early part of the morning, but the 3/4 of the day it ended up pushing up. So we got the big solid green candle, looking like it's probably bouncing off the bottom of the range. This is also a weekly uptrend line that we have here, the dashed purple line. If you're not familiar with our charts and the color coding of the lines that we have on here, make sure to check out our bonus content for our precision trading video, and for our charting basics video. That'll give you a better idea of what you're seeing here on the charts as far as the colors that we're looking at. If we look at the Fibonacci extensions that we have, if we're looking at this sideways action the last 10 weeks as a bull flag, we've got the flag here. I'm sorry, the pole here. We've got the flag that we've been in. So if we look at this Fibonacci extension with the low to high, and then the pullback low, we can see that the top of that range is a 50% fib extension. So it's going to continue to be a bit of resistance, but if we can flip that into support, that gives us definitely the momentum to take us back to the upside. That 2813 again is the year flip. If we take a look up at the left hand part of the chart here, we've got the time frame continuity indicators. So the day, the week, the month, and the quarter are green, but the year is still red. So this has continued to be a level of resistance over the past 8 weeks of the 10-week range that we've been in, giving us rejections at multiple times. So we've got to be able to power through that. If we can power through that and flip that 50% fib extension into support instead of resistance, we can start looking at trying to climb higher. One thing we do want to keep in mind is seasonality. September, October are the worst performing months for technology. And so, we want to look at, watching the downside, making sure that we've got any calls that we're in, making sure we're not getting into negative territory with those, make sure you have good stops. It's better to be able to exit those positions and re-enter if need be, than taking those big losses. So we want to make sure that we're buying calls at the bottom of this range and buying puts at the top of the range. So you should probably be out of puts. It should have been out of puts this morning, and into calls if you're looking for more swing trade situations instead of intraday scalps and day trades. So you should be looking at calls here, or be in calls, possibly getting this gap closed tomorrow, looking to go back up and test the top of the range. So again, it's the same thing for 10 weeks. I feel like a broken record, but there's nothing else I can really give you. Again, we thought we had beat the monthly downtrend line that we were fighting up against. That's come back into play here. If we fall back below this last year's low and try and fill this gap, then again we're back down below this monthly downtrend line, and we're contending with that again. If we do that, we're also flipping basically full time frame continuity to the downside, right? 2438 is where the quarter flips red, and then 2408 is where the week and the month flip red. So if we go below that point, then the year, the quarter, the month, the week, and the day are red. That's momentum to the bears. Definitely looking to try and close this gap here and possibly make lower lows on the week time frame. Just speaking about the week time frame, if we go ahead and take a look here. Let's get this out of here. We did make the lower high last week, right? So we have started a downtrend, as you can see with this bigger dashed purple line, right? We've got the weekly broadening formations here at the solid purple lines. Again, with this monthly downtrend line with the larger dashed green line. So we have started a downtrend with this lower high. We are in jeopardy of making a lower low. Today we could have done that if we had more push down at the beginning of the day, but it held up nicely at the bottom of the range. So we haven't totally kicked into a downtrend yet. We've only set this lower high. We still need a lower low, and then even at that, we would probably want a low below this low here to really lock in a downtrend. If that happens, you definitely are looking at getting October monthlies, November monthlies, puts, maybe even December's, just to see how far we end up going down. We do have this 3 here. Again, if you're not familiar with the strat, once you break up outside of the 3 in one direction and then you come back within the 3, especially if you break that 50% or 50% line of that 3, there's a high chance that you're going to go break the bottom of this 3. So there's a possibility of if we fill this gap, we're below that 50% line of this 3, and there's a good chance that we're going to go see the bottom of this 3 and possibly go down below it. So really locking in that lower low. Then again, we're looking for lower highs to enter more puts or add your position, sell more calls. That's one thing I also did today right at open, is I bought back a couple of my calls that I had sold. Bought them back at $10 a piece, but so I still made nice profit. Just subtracted $10 from each contract, but we were at the bottom of the range, so that was the goal, to just sell them till the bottom of the range. Thought it might take a little bit longer than it did, but if it happens quickly, you take advantage of that, take your profit, and just look to reload. So we'll wait till we get back to the top of the range and get a reversal signal back down, that like we're going to go back down to the bottom, and that we can sell more calls there. But the same thing would apply if we start to break down even further. If we come up here and get a lower high here on the week time frame, we're looking to sell more calls at this level then. So we'll see. We've got a double gap down here. That is a reasonable distance to go for SOXL. It's got a pretty high beta, 4 to 5, depending on where you're doing your research. So it wouldn't surprise me if we filled this gap or bounced off the top of this double gap. These gaps down here, I don't know that we would fill them. If we did, I think something kind of drastic would have to happen, but it could still happen. It's still on the board. We are in the year time frame in a 1, 2 up, 2 down. Right, if we just look at this from a strat perspective, we have a 1 here, which is an inside bar, right? It never went below the low of this candle, and it never went above the high of this candle either. So that's an inside candle, which is a 1 in the strat. And one of the reversals off of a 1 is a 1, 2 up, 2 down. which did trigger. The magnitude is the low of the candle to the left of the one. So this candle is the low, is the magnitude for that move, and you can see it barely missed out on making the full move there. We bottomed out at 723 on April 7th, and we need we could have got down to the 621 to fulfill the strat. So could it go fulfill that strat and get down to that 621? Possibly, but again, I think something kind of drastic would happen. I don't even think, if September and October are bad months, they could be that bad to drive us down to that level. But we'll see. Again, we're not in the business of predicting. We're just in the business of responding to price action, right? From the quarter perspective, we've got a little bit of a more negative outlook than we had previously, right? We were in the 2 up, 2 down on the quarter. I'm sorry, 2 down, 2 up. So the magnitude would be the high of the candle to the left of the 2 down. That's that 36.15. Again, we triggered that, and for a while last month we remained in force, but Friday's pullback combined with this morning's pullback have brought us back within the price action for the previous quarter, for quarter 2 of 2025. So it's no longer in force to the upside, the 2 down, 2 up. But it's still green, and we still have a chance of pushing back up, especially if we get back to the top of if we're going back to the top of the range that we've been in, that 24 to 28 level. We have a good chance of getting back in force, and then who knows, we could continue on up. Maybe if we get there in December or something like that, who knows. Let's look at it from the month perspective, because we did start a new month. It has, that's the week, because the month is still an inside month, right? Last month was a 3 or a bullish engulfing candle, and this month we are an inside candle, which is a 1 in the strat. So we're still waiting to see if we're going to break to the downside or upside. There's no reversals on the table from the monthly perspective. There's no reversals off of a 3, right? You can start to form a reversal pattern with like a 3, 2 down, or if we remain inside this month, we could have a 3, 1, 2 up, as opposed to a 3, 2 down, 2 up, or a 3, 2 up, 2 down. But for right now, on the month perspective, not really much to go off of as far as like buying longer term calls or puts. We're still kind of stuck in the middle here. So I think we've gone through things from a wide perspective. We went through the intraday perspective for today. Let's just verify. We've gone through everything. So we'll go ahead and get into setting our 4-hour markers and our triggers and targets for tomorrow was Wednesday. So tomorrow, let's go ahead and bring up our 4-hour chart, because that's where we set our levels. Did we not set our levels? Yeah, we didn't set our levels for today. I thought we did. But so let's go ahead and move our 4-hour trigger to the downside, to the low of the second 4-hour candle of today. We'll take the previous low of day and move it to today's low of day. And we will take the previous high of day and move it to today's high of day. And lastly, we will take the 4-hour trigger to the upside and move it to the high of the second 4-hour candle of today. So that easy. We've moved our triggers and targets. We can see that on a 4-hour perspective, if we get the trigger to the downside, that would be going below the low of the second 4-hour candle of today, triggering a 2 up, 2 down. The trigger being the low of the second 4-hour candle of yesterday, that's 24.47, and the magnitude of that move being the low of today, 23.80. So, let's go up to our notes, and we can see that here we have in our notes on the 4-hour time frame, we have our trigger of 24.47, and our target or the magnitude would be 23.80. We want to also take note that we did fill in the gaps that we wrote in the gaps that we have on the chart to the upside that were formed this morning and Friday, in between Thursday and Friday. So we have to remember those are above us now. We have the market makers expected move for the week, again, $2.21. So that 28.25 and 23.83. If we take a look back out there, we opened today and pushed down exactly to the market makers expected move to the downside. So we've hit that bottom of that expected move. We've got the high of the expected move up here. Do we go reach that high? We'll see. Again, this could just be a lower high on the 4-hour perspective. We may even push up tomorrow just to make a lower high on the day perspective. But again, we just have to assess that as it comes. We'll have our triggers and targets ready, but you can see how that the low of that market maker's expected move did come into play here today. If we go back and look at our upside triggers and targets on the 4-hour, it would not be a reversal. Just like the low, to the downside would be a reversal with a 2 up, 2 down. To the upside would just be a continuation with a 2 up, 2 up. So there's a very clear trigger, but the target, we have to assess the price action and determine our targets from there. So if we look at that trigger of 25.28, we do have the gap close here, right, at 25.67. And then we have last quarter's high and last month's 50% line, right? So that 25.67 to 26.11 area is going to be an area of resistance for us. So from a 4-hour perspective, you could have all three of those levels as a target to have out there. If we look at, do we have this? Yeah. Here we come back to where we drew the Fibonacci retracement for the 50% line of this gap that we had from the close on Friday to the opening print on today. And we can see that this 2604, which is just right below this 2611, last month's 50%, that's the 100% fib retracement. So, the 2604 lines up with that 2611. So looking past that, we can look at the Fibonacci extensions and 2679, 2702, 2725. Those can come into play. But as we know with the 4-hour triggers and targets, those really roll into the day triggers and targets. So let's go ahead and switch and focus on the day and look at those triggers and targets. Let's actually bring up a better chart there. There we go. So again, if we get the trigger to the upside tomorrow, that triggers at today's high, 25.28, and we have a clear 2 down, 2 up with a very clear entry here at the high of today with the exit or a magnitude at the high of the previous candle. So that 27.35 is the magnitude. So again, 2 down, 2 up. We've got the 25.28 as the trigger. Oh, we had targets on the way up. I forgot to mark those. So what we did is tomorrow. No, that wasn't it. So on the way to the magnitude, right? Because we've got the gap fill and then such a long distance to go before we actually reach the magnitude. We do have the extended targets here. Targets on the way to the magnitude because we might not make it all the way up there, of the 2679 and 2702. And again, the high, the magnitude 2735 is where we would top out at. 2735, right? Sorry, I should have had those in my notes already, but there we go. So it triggers at 25.28, the 2 down, 2 up. Again, we get the gap fill, and then we have our targets on the way to the magnitude of 2735. So that's the triggers and targets to the upside from the day perspective. To the downside, we would have a 2 down, 2 down continuation. So there would be a trigger, but no magnitude, just targets. So again, that would trigger at the 2380. That's today's low, 2380. And then we have our extended targets of 2350, 2295, and 2257. So we've got the 2350 right here, last year's low. Then we've got the previous lower low on the day of 22.95, and then the previous lower low on the day of 22.57, which is also the top of that gap. So we can have an extended target of the gap close at 21.98 as a further extended target, but I don't want to get too carried away with our extended targets. We do have it on the targets for the week here at 21.98, so we've got enough targets and extended targets on the day perspective. Those day triggers and targets will go ahead and roll into the week triggers and targets, which again, because we are at the beginning of the month, should roll into the month triggers and targets. Again, we're going to take and unbold the quarter because it is no longer in force. It has triggered the 2 down, 2 up, but it's no longer in force. We only leave it bold if it's in force. And then again, the year has triggered the 1, 2 up, 2 down. It's no longer in force, but it has triggered. So we just want to keep that in mind, knowing that the year is red while the quarter is green, and the month and the week are green as well. We just haven't filled those in. So we'll get into Friday's, market maker expected move when Friday comes around. But for now, we know what the market maker's expected move is on the month. Again, that's not an end all be all. It doesn't mean that price action won't go below 23.83. Like we saw it bounce there today, but that doesn't mean it can't go below it. So just continue to just watch that as a bounce point. But again, if just as it could be support, it could also become resistance if price action does go below it. So we've got our triggers and targets for tomorrow and for the week and for the month, and we've reviewed the ones for the quarter and the year. I hope everybody has enjoyed this video. I tried to make it kind of short, not stuff too much information in, just really get to the triggers and targets, but while still covering enough information. But if you did like this video, go ahead and give it a thumbs up. It helps the video grow, helps spread the word about SOXL, helps spread the word about the strat. We're not selling anything on this channel. Everything is free, so we just want to spread the word. Make SOXL contracts more liquid by having more people trading them, and just introduce people to a simplified way of reading price action by introducing them to the strat. If you are interested in the strat, I do have a link to this free PDF in the description of this video. There's also a link to Rob Smith's YouTube page. He is the inventor of the strat, or he was. He's no longer with us, but if his YouTube page is still up, so there's a wealth of knowledge out there for you to go and soak up from his page as well. He's gone through every single stock ticker in the market, so using the strat. So it is a proven strategy. It's repeatable. It's not just to be used with SOXL. You can use it with any ticker symbol. This channel just happens to be dedicated to SOXL. So also go ahead and check out our bonus content if you're not familiar with the channel. Again, the precision trading video I think is a big help to people that like to do intraday trading, day trades and scalps. You can even apply it to overnight swings as well, using the 5 major levels that we talk about: the overnight high, overnight low, opening print, previous low day, and previous high day. Using those as your guides to your targets, whether you're going to the upside or downside. And definitely check out our basics of charting video as well. It's a really good video for a basic breakdown of price action and how you can just easily break down a chart, any chart, again, a repeatable strategy, and really tell where price action should be going to in the near future. So again, give it a thumbs up. If you're not subscribed, go ahead and subscribe, hit the notification button. I hope everybody gets some good rest tonight, wakes up refreshed tomorrow, and I hope everybody has a great trading day tomorrow. Again, here's our triggers and targets for tomorrow, the week ahead, the month ahead, the quarter, and the year. I hope everybody has a good rest of their night, and good luck tomorrow trading.